Mic check and screen share check, please. All right. Good evening, guys. Nightly strategy podcast for June 7th, 2022. Let's start with sniper trades of the day. So here's Tesla, and we're using a standard risk box of $6 and half a risk box of $3. So we have a large gap down in the morning, a reversal, missed a morning hook. We're on 5-minute bars on this one. What would we call this? I think of this one as an SSC. I mean, I could see a K2 in there. I suppose if you go this way with a low and a higher low, I could see that as a kata 2. I was really looking at this as a harsh sell-off and then an SSC. But I could support a K2. My standard risk box you see in the yellow. My execution stop would be here. So I'm using the bottom of the dragon. I've placed my little 0.5 risk box right there for you. I want to see it close above that in order to help me move my no lose plus dinner for 2. I get a close in the next bar. Excuse me. So I get this close right here. And so I move my stop up to up to about a 0.2. Why isn't that run? I notice also that it's getting ready to test that declining PSAR, so we're going to find out something pretty quick about this trade. It breaks through. That's a good thing. The next PSAR down is right about there, so that feels pretty good. You can notice that the 3-period moving average is starting to stall a little bit, and mostly because the 2 previous bars were so large. So that's sort of a natural thing. But at the same time, I'm looking at, in the pre-market, I'm looking at this solid resistance or support level. That this cluster of price action in here is reflected in price starting to slow down. So that doji has me a little concerned. So right now, I would not be offended if you raised your stop, from here. I mean, I'd have been happy with moving the stop to there to get it above the Z2 or the point 0.5, I should say. And then here you might even creep that higher if you wish. Lucky. So this one breaks out on a really large bar out of this doji. So when it clears the top of that doji bar right there, then it really takes off. And as it runs up here, I take my stop and just take half the bar. By this time also, when I hang I'm going to be hanging a 0.5 off the top somewhere up in here. And either one of those gets me out of this thing approximately there. So this is the trade that we get. Which is about 1.5, maybe 2. So that's the Tesla trade of the day. Next one up is Alcoa. 50-cent standard risk box, 25-cent half a risk box. So that's an R10. That's a half a risk box there. Metals were strong yesterday. Significant gap down. Tests higher, but then closes lower. There was probably a short position in there that I missed on the shorter time frame. Now this feels pretty good. Now I'm thinking of this as a like a morning hook that has recovered. What would we call this entry? Yeah, I think of this one as a SSC again because we don't have higher lows on this, right? I mean, I got this low here below the dragon, but I don't have any lower low over here that's giving it some long-term momentum. So instead, what I see this one as that harsh sell-off followed by a recovery that crosses the dragon, which gives me a feeling of an SSC. Now, in this case, in this case, the standard risk box works out to be about the same as the bottom of the dragon, so that would be a 1R. And I've placed the, that half a risk box in here, and that's going to be up there very near the test of the PSAR. Is it normal? Well, the doji simply means that, the next move is probably bigger because the doji by definition is a narrow range, right? It's a small range. And there's no clear winner between bulls and bears. So it looks like a little plus sign, arithmetic sign. So it's just like a comma, it just waiting to see directionally neutral. The next move is likely to be larger and could be in either direction. It gives no other information other than to say, yellow alert, stand by, be prepared, battle stations. So this one closes. I'm going to come in here a little bit closer. So this one closes above that 0.5 half wrist box. It closes above there. So I feel justified in moving my stop from here to there. Could probably have even done that in the previous bar because it had gotten all the way up to here and it's still closed above the blue. So, I mean, I wouldn't be offended if in that first bar you had just put that no lose stop right there. I didn't get it in there until I saw this thing moving up. And then I moved my stop to here. Check or hold. Feels pretty good. Wouldn't be offended, again, if you took half. On this bar, this little pullback and then the recovery, I went ahead and moved this stop up to here. Then when it cleared that high and ran all the way up to here, I went ahead and locked in that. And then when I hung the blue box, that was about the right price level. And then I kicked out shortly thereafter for this trade. So that one is about 2, maybe a fraction more than 2R on Alcoa on the SSC. Check or hold. All right, next one up, Chevron, the strong energy company in the strong energy sector. So I'm noticing this this down here. If price ever gets below that red line, what should I be doing? You would be correct. Collapsing dragon. I waited until the third bar. That first bar caught me a little by surprise, and I was on Tesla. But I like the rising lows and, you know, basically a new high. So I took that one there. And then here's the standard wrist box, which was so close to the belly of the dragon that I was just willing to take that as my 1R right there. I think of this one as a Kata 2. And only because it failed to fail altogether. I mean, I look at this, and then I consider the breakout to the upside like that. So that to me, that has a feeling of a Kata 2, just a continuation and go. When this one closes, up here, outside of the blue box. I go ahead and move my stop to, like half the blue box to give it some room. Especially strongest stock in the strongest sector. It's a science project now. So I don't mind giving that one a little more room. Three bars, and it couldn't really make a new high, and it closed. It's kind of a doji, but it opened and then closed in the bottom, 10% of its range. So this already felt like for 5 minutes it could not make any higher high. So this was that was kind of feeling negative to me right there. So I put the stop in right here below that bar, and then shortly, I think in the next bar, it exited. Now this one, felt very much like a Kata 2. And so I took the re-entry after that little doji. I looked at this one. I looked at this as a doji that held at the bottom of the dragon. When it took out the top of that and crossed the dragon again, I just went ahead and re-entered. I chose a stop right here at the bottom of the dragon. So even though the full 1R loss is down here, I'm locking in about a 0.3 maximum risk on this one. So that was kind of a re-entry is the key to sanity in the spirit of the Kata 2. Check or hold. This one is starting to struggle. The first leg up was not much. It was like about a 0.7 win. This one is already stalling after 2 bars. Not much happening there. And, gets about a 0.2 or a 0.3. Not much to crow about. But again, we'll take it. Here's Brazil. This was all pre-market stuff. This collapsed below this line here, the previous day's support. So what might we call that trade? Yep. Collapsing dragon. By the time the second bar closes outside of the blue, I'm moving my stop down to no lose plus dinner for 2. And what would we call this? Science project. starting to stall. So I stack my blue standard half a wrist box from over here. Stack it off the bottom. Moves that far off the bottom. Go ahead and cash that one and get that trade. Oh no, you could do that. I didn't draw every single possible. I mean, you can. Whoops, you could still be doing the usual. There's no reason not to be locking in pieces. You end up getting there the same way. So, as long as this thing is in the money, and if you're just using the edge of the dragon, even, I would rather nudge it down and just trail and say, what the heck. If you're using the blue box, you never, if you just hang out from the bottom of it, from the maximum excursion, it never gets you out of the trade until it's time to get out of the trade. So that blue box lens, that little half the wrist box, is pretty nice. Simplifies life quite a bit. Missed the short. Missed the SSC. Next up, Treasuries. That had such a nice move yesterday. Man, oh man, was that ever nice. So I'm noticing the, just from the pre-market move, what's the, a violation of that red line would lead us to what? Yep. What could we call that? Yep, good doggy. And I would feel probably something like this. That would limit your loss to 0.5 already. This feels kind of aggressive at like about a 0.2 or 0.3. I could live with the 0.5 as opposed to letting it come all the way back to here. Your mileage may vary. And already I'm thinking of this, to be honest. Because why not? That would be a science project. It's a different feel altogether. I went ahead and took half that and got a little taste. Your mileage may vary. Then I decide to re-enter. And because I'm going to use something like, I would probably be using that right there. I'm not really risking much at all. That's about a 0.3 risk. It's basically just a re-entry, and it's because I noticed that the bottom of the dragon was still holding. So I feel like, all right, I'll pay the round trip cost, but I don't care. Check or hold. Notice how it's the convenience of the yellow and blue boxes to sort of frame those. And I got some K2 juice working on this thing too. After the two nice moves, feels pretty good. You know, if I take that same, whoops, sorry about that. Just going to draw that lens again. You know, by this time, why not? That's a good place for that red line. I wouldn't be offended if you got out there. It nudged up a little bit more, so I moved halfway up. I think this thing rolled over shortly thereafter, and gets me out at the at that second red line. Last one, Cliff Natural Resources. What might I call this if I get a move, let's say above this blue line? What would we call that one? I would think of that one as an emerging dragon. So, like, if this thing took off right now and gave us like this kind of move right from the open and just did that, by the time it breaks above that blue line, I'm looking at that as a emerging dragon because it's taken out both of these humps right here. If this takes off from here, I would think of that as an SSC. It's not a K2 because there's no higher lows to contend with. You know, on the other hand, yeah. I mean, if this thing took off from here and crossed the dragon, like if this thing, if this crossed the dragon, like right here, and took off this way, I would think of that as an SSC because you have a harsh move down and then a recovery that crosses the dragon. So I would think of that as an SSC. On the other hand, if this breaks down, you know, say below here, I would think of that as probably a kata 2, because you have this, and then this, and then a kata 2 breakdown. All of these shenanigans in here, I took that to be the like a morning hook and a crossing to the upside, and I treated that as an SSC. I wanted to only be long the metals today because they were so strong yesterday, so I was inclined to wait for that opportunity. It started to fail right away, so I locked in a little fraction. So this one rolled up and then came back in, so I wanted to not lose. So I took a little piece. This is another one of those features from today's trade. Where I was playing that kind of rising pattern, and the fact that it was already above this little resistance level. So I played the re-entry, gave back a little piece, but when it didn't fail any further, this still felt pretty good. This almost had a Kata 2 feel to it as well. Something like this. You know, even like that. That feels like some upside pressure. And if it breaks above that blue line, then I'm thinking emerging dragon territory. Feels like emerging dragon. You know, by this time, you know, you need to have your stop somewhere up in here by now. Even as this one was moving up, you could be locking in pieces like here and here and here and maybe even there. Take your pick. So now, whoops. So now you got to really run this up into here. Maybe by now even to here. Because it's already had, remember, this was already one big sell-off and then a recovery. So there has been some tactical profit taking already. So in my mind, taking the half of that candle is justified. And it rolls over, and that's the blue box off the top. And then I was already prepared to stock this for a re-entry were it to break above that. I don't think it did. So that again, that's the case of re-entry being the key to sanity. So get this trade for a little taste, and then a nice trade on that one for another couple R. Check or hold? Okay, simplified market health check here. The 5-day range is really compressed, remains compressed. The momentum is still pure sideways. Nice tight little range. You know, we still have, you know, the size of the 10-day range compared to the size of the 5-day range. This is really range compression. And the 1-day range was pretty small as well. So, again, a market that is preserving energy. It's testing the top of the dragon, but that's still holding. And there's the spine of the dragon. There's the belly of the dragon. There's your PSAR. So we're still tentatively holding on, 14.25 from the top. Still cautiously optimistic. Here's our 30-day high. We're within a fraction again of our 10-day high. All right, so the S&P was up 1% today. A very tight cluster with Treasuries at also up 1.1. The Qs and the diamonds up about 0.86. Emerging markets were the laggard at 0.31. The Russell was the best at 1.6, but a pretty tight range, all things considered, between the best and the worst. Okay, clusters of sectors that underperformed: finance, materials, blended commodities, clean energy, 0.66. The two lumbers, 0.5. Staples, Mexico, Ethereum, blended large cap crypto, and marijuana for the flat to the zero line, basically. Then actual losses, agriculture, discretionary, balked, global future finance, lithium blockchain, Bitcoin futures minus 1.38. VIX, Brazil, and Robinhood down 4.25. Individual companies, targets that underperformed strongly. Coinbase minus 1.56. Tesla only up 0.25%. The Aussie dollar up 0.78. Sectors that outperformed today: tech and wheat and precious metals up 1.2. Real estate and the FANGs 1.3. Oil 1.8. Simon Property 2.4. Well, Van, if the checker hold ain't working, just you can always just text me a question if it's hold, but I'm already moving past you. You know that. Let's see. So oil, Simon Property Group 2.4, Arc Innovation 3%, Energy 3%, Arc Genomics 3.6, Oil Exploration 3.75. Another strong day in the biotechs. I missed this one today. I should have been on that because it was strong yesterday. 4.9%. So quite a range of outperformers to work with. Report set. Bearish normal. Still pretty healthy on the short term. Bruised on the longer term. Risk on is abnormally strong as it goes above 1.0 on the Z-score there for risk Z. So every day that it doesn't fail is actually one more day stronger, is how to interpret that. And on a 10-day NDX, we've actually been overbought for a while. Still room to the upside: Walmart, Tesla, Merck, Disney, Intel, ExxonMobil, Caterpillar, Verizon, Diamonds, and Boeing for the min pains. Only a handful of auto framers. As we're so close to that 10-day high, you just can't get large multiples in there, except for Tesla. Uh, ETFs even more so. 2.2 on Latin America, 3.0 on Treasuries. Another strong day in oil and metals. Tesla, Disney, Walmart in the auto framers, also Merck. Tesla at the very top of the pinch stack, nice. U.S. Steel, also poised to move. I like it. We've got a new refinement on the volatility. I've added, we've always had the three locations, the weekly, daily, and tactical, which is the 150-day, 30-day, and 10-day. And we, as you know, we're looking at the 5-day range percentage compared to the 150 previous days to come up with that z-score. But I now am thinking about the 1-day z-score. And here's why. This is a $1 million idea. My son programmed this for me overnight. All right, so we know that if we think about sort of like long term and short term, in the long term, location is more important. In the short term, it's volatility. So this location is a rational response to the evidence of a trading range. Volatility is an emotional response to fear, surprise, and greed. So on the long term, we look at the 150-day range, the 30-day range, and the 10-day range. And those scores tell you where in the stack of 0 to 100 in each of those trading ranges. So you simply take the high, set it equal to 100, the low, set it equal to 0, and then just build a little digital step ladder. And this tells you, where in the range it is. We've been treating the short-term volatility as a 5-day move. Why? Well, because if you're coming out of a Z3 pinch, it's not unusual to see a big move which draws momentum, and then you might get a 5-day move, and now suddenly this move from the 5-day low to the 5-day high is a large percentage, which gives you the alert that that thing is really in play. And so when we compute the z-score, we're taking the most recent 5-day range and comparing it to the last 30 5-day ranges. Maybe there's a small one and a large one. And then from that, we compute, the average and the standard deviation. And then that's what gives us, because of math, it gives us the z-score. And so the z-score says anything greater than 1 is abnormally volatile. Anything less than -1, although I'm actually using 0, is abnormally quiet. And then that alerts us that something emotionally abnormal is going on in the short term with respect to volatility. It's either like Godzilla, when it's large, he's raging, he's already come out of the water and went and stomped on Tokyo. He's raging. Great big volatile move. Or if it's abnormally quiet, it's a little quiet Godzilla just lurking under the surface, ready to pounce on Tokyo. And then that first move catches everybody by surprise. Then there's momentum, and then you get a 5-day swing that's enormous. And it takes about 5 days, it seems, to really manifest that full swing move. Well, what happens if you had a nice quiet thing and then you had 4 big days but now starting to diminish, and it terminates in a tiny little doji? Well, that's interesting. That doji is now telling you that maybe, just maybe, that run is done. This large exceptional move might be done. So the doji says, look, I don't have a directional bias. I just know that the move up could be as big as leg 1, so I can program a leg 2. But it may also be that this was a false move and it's going to roll all the way back down to support. How many times have we seen that? A lot. So the doji, a small range with no directional bias, is an important signal at the end of an abnormal 5-day range, whether it's up or down. That 5-day range could even have been this. It could have been 2 big days and then 2 other days, and then a doji right in the middle. The doji is still telling you that that large range volatility is still there in recent memory, but that's currently poised for a sharp move in either direction. So now what we've done is we've added the Z1. So we're calling this one the Z5, the 5-day the Z-score of the 5-day volatility. And then we're taking a look at the size of today's range, which is nothing more than high minus low divided by closing price, equals a range percentage. And then we're computing the Z-score of that against the last 150 days. So we get a full look at the volatility of individual days of the last 150. So what I am actually looking for now as a refinement would be something that was, I don't know, a Godzilla move that was abnormally quiet and then terminated in a tiny little doji minus 0.45. Or I might prefer something that had a very quiet 5-day range, but the 1-day range was relatively large. So now on the short, so if long term is based on location of 3 time frames, 150, 30, and 10-day, we've now got 2 measures of volatility, the 5-day Z-score, or I should say Z5, and then the Z1, which is a 1-day range, which is going to tell us everything we need to know about dojis. So if the 1-day Z-score is very small, then you're probably going to have a tiny little doji, that 5-day move terminated in a tiny little doji. But if the Z-score is large, then you might have had the first day of a big breakout. What you care about is the abnormal Z-score on 1 day that says, hey, this thing just started to make a move, or it's so quiet it's signaling the potential for a sharp move in either direction. So now when you combine location plus 2 measures of volatility, you have compounded critical state. And that's what you want. You want a compounded critical state to start stacking up all the reasons why this thing is poised for a large move. In the same way that we want microwave popcorn, we know that it takes 45 seconds for the microwave popcorn to be ready to start popping. And then it's going to pop hard for about another 45 seconds. If I just see a bag of popcorn in the microwave, and I don't know how long it's been in there, I don't know where in the life cycle it is. I don't know how soon it's going to start popping. But if I can use these measures over here to get my critical state, and I figure, I'm really close to this thing making a large move in either direction, and the popcorn is going to start popping, I don't have to wait so long for the big move to happen, and then I can lock in my no lose plus dinner for two and turn it into a science project. So, in conclusion, Z5 and Z1 are how I'm rounding out, or I'm completing the framework on these setups for the sniper. Praise to my son for doing some good work for us here. That's worth millions. So what we have in the S&P now it's swing trading one day at a time, Nicole. When you have an abnormal Z1, you are ready for a turbo trade intraday. And if today was the first day out of a sideways quiet channel, if that thing was tightly compressed, had a really small Z5, today might be the day that it breaks out. So you want to have that bracketed. So the intraday trade could be the first day of a really strong move. It could be a range stat move that first day. If the first day on the breakout was a range stat move, guess what tomorrow looks like? More than likely, people are going to say, oh, this thing just started to get in play, and now I could have 5 days in a row of an extraordinary move, which we got alerted to by the quietude of the Z1. So that could very easily become a swing trade, which we're going to play intraday one day at a time with turbo. And then as long as it doesn't work against us, that thing could grow into being a swing trade. Primarily an intraday trade for me, especially in a bearish normal market. Why would I take overnight risk? So in a bearish normal market, any bear, I'm prioritizing the intraday, and this works perfectly for that. All right, so Godzilla Trades. Here's the ones we have. And most of these are quiet little baby Godzillas waiting to sneak up on. I want you to think of that being like, here's the ocean and here's Tokyo City. And you got Godzilla coming up out of the bottom, and he hasn't even breached the surface yet. But as soon as he does, he's going to fall on Tokyo with rage, and that's going to be the breakout. But until here, he's very, very quiet, and that's what you get in these that are below zero on the 5-day Z-score. But if it was large, like REGN, he's got a 5-day Z-score of 2.35. That's Godzilla has already come out of the ocean and is currently stomping on Tokyo. Yeah, REGN is pretty awesome right now. That's just as nice as you could want. So let's remember what it just told us. The 5-day. Look how big the 5-day range is. Huge. It's almost as big as the 10-day range, because it was here and moved all the way to here. And then look at today. Tiny little quiet z-score inside day, ready to break out. That's a zero state, ready to break this way. If it just gets back to the 5-day high, huge trade. If it falls out the bottom, look how quickly this thing collapses and becomes extraordinary. That is your perfect setup for tomorrow. Priority number one in a very well-defined 30-day trading range in here. This is now the beauty. You've seen me marking up the daily range in a yellow box. The 5-day range is the blue box. This is the 10-day range. Here's the 10 to 20-day box. Here's the 20 to 30-day box. And here's the overall 30-day box. And here's the 150. So on these lookbacks, the rational mind is dealing with the 10, the 30, and the 150. The emotional rat brain is dealing with the volatility of the 5-day and the 1-day. So you have this exaggerated move. But look at that exaggerated move. It did not fail today. It actually recovered and closed higher on a small range. That could be 1, 2, 3 to the upside, 4 to just the top of the dragon, 5 to the 10-day high. It's easy to see that the downside rewards you. And look what happens when this thing collapses and collapses. So do you need much persuasion that if this is failing, you want to be short? No, you should not need persuasion in a bearish normal market. But this little price action just tells you there just might be a 1-day, second-day momentum move on this one. And REGN has a R10 of about $2.66. So you might want to know that. Let's remember to take a look at that one tomorrow. So that's worth about $1 million over the next 10 years or more. In our tactical symbols, we got a couple Godzillas here. Ethereum and blended large caps. Look how quiet they are. And also look how quiet they are. Nothing special yet, but very, very quiet. So that is, again, going to be one where it's bounced, small 10-day bounce, terminating in a little doji. Nice. So that sets up this move. Large recovery, collapsing dragon. Standard work. The fireworks are ones where the weekly and the daily are all greater than 0.9. The short-term z-score can have anything, although you see most of these are all above 0.9 also. You have two that are fireworks where the z-score is greater than 1, but you have a whole bunch of popcorn where the z-score is less than 0, and some where that is extraordinarily quiet. Like WMB and Devon Energy and Kinder Morgan. Holy smokes. You can't get any quieter than that. They are poised to do something special right there. There's Schlumberger, Chevron, nice. Conoco, ExxonMobil. The whole energy sector is just quietly getting things done. And look at Devon Energy. Look how tightly compressed the 1 day and the 5 days are. Man, do we have to look at that one. Devon Energy for the win tomorrow. Oh, man. Perfect. What would surprise everybody? A sharp collapse, which could get you down here to 72, and then everyone would say, oh, well, we'll just buy that on a dip. Yeah, but meanwhile, you get a chance to collect $4 on a $1 risk. Or this thing breaks out quietly to the upside. Look how quiet that 5-day range is and how small the 1-day range is, and getting ready to break out altogether. Wow. Is Devon Energy any good? So, understanding the 5 and the 1 for our short-term volatility for critical state thinking. Long-term, 10, 30, and then 150 is reflected by this purple line. Okay? Those are rational analysis of trade location, just by basic measurement. The volatility is feelings based for shorter term traders, driven more by fear and greed and leverage to overreact. Really important. That is on a daily chart. For Devon. Yeah, that's the daily on Devon. Yeah, Devon Energy. Somebody asked me, why do you pay attention to Devon Energy? Because of reasons. Devon Energy has been very good to us. This was $10 back here in COVID land. This was the COVID sell-off in this region here. And we've been trading the crap out of Devon Energy ever since. I mean, we've been trading Devon Energy for a long time, but that thing swing trades like a maniac too. But we digress. The fence sitters. Again, these are the ones where the weekly and the daily are between 0.4 and 0.6. And all I do is I'm willing to take a look at any of the z-scores on those, ready to break in either direction. Still look. I'm sorting these now by the most quiet. Whoops. on the Z5. I'm still using the Z5 as the primary sort, and then these are the most volatile in the S&P 500, just as a point of comparison. Okay. Yeah, and there's REG in there. Again, for other short-term momentums, here's your top performers on the basis of one-day performance. The worst ones, those are the ones that are going to be most likely to have sharper moves. That's momentum that's already in play, and there's your S&P for reference, almost always in the middle. That's the little wild childs running around the maypole. Dominated by spring and summer. That's because of the strength relative of the last 10 weeks, or 10 days, I should say. Notice that in our tactical stack, there's only two symbols that have a 5-day z-score greater than 0, and those are so close to 0 that it's not even funny. This is how compressed the last 5 days have been. I mean, look how many are more than one SD in the quiet. That's all these abnormally quiet. To include the diamonds, spiders, tech, U.S. Steel, Devon Energy. Devon Energy just looks awesome to me. Amazing trade location and unbelievably quiet on the last 5 days and 1 days. Boy, is that thing due for an explosion. Wow. Just wow. Let's look at some trades. Yeah, after we're done, Bill. 3-1, 3.1 for Wojcik. Nice breakdown, good pay. Cross the VWAP, that should be a scratch instead of losing 0.5. Good scratch, good scratch. This is where the short should occur. Not here. This should be short there. Got paid, got paid. Nice work. Charles working through a personal update on collapsing dragons, getting the rules and the pictures for his own battle book as he's putting together his trading plan. He's doing the same for Kata 2 to be able to study his playbook with care. And then the same for the SSC. So really good work. I love that chart right there. That's a nice one. Nicole had a pretty good breakthrough day today, I'm thinking, is what I'm hearing. Let's see what we got here. Not going to shoot you too much. I like this one. The PSAR is down. Here's a little doji that broke down, so you get short. About a 1-2-3. I like that. Here's the PSAR flip. So she gets, this was probably just a fill issue. Standard risk box. I like that. I like the re-entry. Probably standard risk. Got paid. I like the short. We might have gotten out of that a little sooner, but that's still pretty good. I'm liking all those. Much more orderly. Much closer tuned to the turning points in those PSAR flips, which I think is important. And shifted to the 10-minute frame too. So here's the summer, leaves the river, PSAR's down here, standard risk gets paid. Oh, that was the same. That was the last same as that last trade. Let's see. I think is this long to here, or no? This is short scratch. We might have gotten this one, but this is still fairly good. Yeah, I need you to draw the boxes so I can see where these things are starting and ending. This feels like wasn't much happening, and then it finally works, so re-entry. Probably second position. I think we probably held that one beat too long. You let that second position go negative. Any exit above that line right there, anywhere in that bar or in this bar would have been okay. I don't like letting that second position go negative. Although if that's a automatic, that's fine. Tally sheet, standard work, scoreboard. So there's 1, 2, 5.3 minus a half. So this is probably around 4.8-ish for the day. Look at you. Getting it done. What a day. Now, remember what got you here. So you're monkeying around before, and today your performance took a raise up. So we want to make sure that your psychological safety stops and positive habits of mind are locking those things in. Don't give back those hard-won lessons by changing what you just did. Ratchet it up. This is now the new normal. And although it feels really good right now, we just want this to be standard work. And in practice, what that means is we're just going to squeeze all the fun out of this thing, right? So you have some fun and some joy and pride. And all we're going to do is just crush this out and so that it becomes standard work. And that is the new expectation. And that's how you get this new higher level of performance normalized. You just say, hey, this was not exceptional. This is just what happens when I follow the rules. No big deal. It's a big deal today. This is great work. But what we want to do is quickly reinforce that with professional thinking and professional practice to lock it in. Lock it in. Don't give that back. Remember what it took to get here. You paid that price. You get the scars to show for it. So respect those scars and what they mean. All right, Paul, on the Euro USD on the threes. Those are pretty quick scratches and losses in the noise of the dragon. I don't know what the patterns were, if it never even gets out of the dragon. But this is a good short because now you're in a downtrend. And that should be your risk box. So that gets paid. That's a great exit. This in the future, that's a 1, 2, 3. This is where we should be long with a stop right there. So the difference is this extra piece right here. If you take that exit because you want to lock that in, then this is your re-entry instead of here. Then this re-entry gets paid. And that was a quick scratch. I like that idea. Still, we'll take that. Getting paid to learn. I think is this the same one? Yeah, this is the same one. Agnieszka. Entry trade 1. Initial risk down here. Exit 2.3. Check. Just like downtown. Agnieszka again. PSAR flip. Using the bottom of the dragon as the risk box. She's in 2.6, still in the trade. This is Canadian, Japan. Still in and managing it, so that's going to be fine. All right, for Tim. Okay. This should be the stop and reverse here. That's a kata 2. And then that should be ridden. Trust your PSAR. This stop and reverse pays for that and gets paid all the way through here. This is a good short, good exit, great re-entry. I'd like to get paid just a little bit more on that. This almost feels premature. But if you do take that, then we got to get out here instead of here. That short is good. Little jumpy and nervous in here. That short stops. On the big downtrend, let's see this thing turn. See how that turns? And you get the PSAR flip? That's what happens when you wait for that. This, there's no hurry on that. So the short was fine. Let's wait for the PSAR flip before we start getting long. We're getting a couple of these in here where we're jumping the gun and we're not respecting the power of the PSAR. Oh, off desk. Oh, almost predictably. This looks like my brother, Aussie, 10-minute. Paid, scratched, paid on 2 positions. Routine. 5-bar. Supposed to do that. Cal, I think you're over trading, although this turned out. This should be here, and that would allow you to scratch here. PSAR flip gets paid. That's good. That's 3 trades inside the noise. You got the Z3 pincher. This is the first one that I think you should be taking. Good scratch, good scratch, good scratch, got paid. Over trading. On the other hand, you're getting paid to learn. And this is why waiting for the confirmation. Look at that super pinch. And then when that works, pause, refreshes, and going. Yeah. There should be one short position in here which didn't pay. Stay out of the Crocodile River. Luke for 8 today, getting back into form. 1, 2, 3, 4, routinely. Whoa! And now he finally captured it like he's supposed to. Waited for the smoke to clear before getting short. And then back to work. That's pretty nice work. They all look the same leaving the river, leaving the station. They all look the same leaving the station. Arch getting back into form. That's good. Calm down. All will be well. Here's the PSAR flip. Great. Waits for it to confirm. That's great. This is a great re-entry. You're doing the right thing. I like this. Could have been a little quicker, like right here instead of here, but that's pretty good. Then this was slow. This should be right here. And then I would say probably here instead of here, because once that crowns, this is crowning at the same place that this one did, and it's failing. It did not go like that, so take it. So this should be from here to here, and that'll give you another 1 to 2 R. Well, I'm not going to yell at him when he's doing finally what he's supposed to do, and I'm not going to praise him with great praise for doing what he's supposed to do. All right, scratch. This is one we got to get paid on this. This is a one. This at least is a 1, 2, 3. This was already outside the Z3, so you got to take that right there. Or even if you take half the risk box, you get out here. But if it's outside the Z3, especially if we're late getting in, dude, this is not a routine trade. Pretty good short. Good. Now I'd like to see you get short again here, although that's pretty nice. This one probably happens so fast. But again, if you take half that risk box, we might have squeezed a little bit. This is late. That's given back way too much. We let what should be a positive trade go negative. Same here. Stop doing that. And you got paid. Here's our re-entry. All right, getting there. Up 3.4 today. Welcome back. And I think we saw that one. Yep. So good work today from the team. Good job, guys.